Hello guys, this is ObaFX Trading Academy. Welcome once again to my YouTube channel. So as we all know, for those of us that are familiar with what we do here, we like to do a whole lot of top-down analysis of different financial assets, from cryptocurrency to currency pair and also commodities, as well as the Deriv Synthetic Indices. Now, for those of us that are not conversant with Deriv Synthetic Indices, they are financial assets that are available only on the Deriv Brokers platform. So earlier today, depending on when you'll be coming across this video, I did a top-down analysis on the GBP AUD pair, and it played out very quickly, and we were able to make massive profits from it. So you can take out time to also check out the video and compare the before and after the analysis, what happened in the market. So without wasting much time, I'm going to be looking at a Deriv Synthetic Index tonight, and it's the Step Index. And for those of us that are conversant with what we do here, I like starting my analysis from the higher time frame down to the lower time frame to look for market opportunities. And we use a pure price action trading strategy. In other words, I do not use indicators for my analysis. Not like indicators are bad, but I believe that in trying to analyze anything, the ultimate component in doing so is the price of anything. So if the price is high, people would want to sell, and if the price is low, people would want to buy. So relating that to whatever I'm analyzing in the market helps me to make informed decision. So let's get to it. From the charts that we have before us, I'm already on the higher time frame. Like I said, I like starting my analysis from either the monthly or the weekly time frame. And also, for those of us that have been following this channel, you know that I use three basic tools. There are three basic tools I use in my analysis, and they are the trend line, support and resistance, and the Fibonacci retracement tool. I've been making this promise that I'll be doing. I have videos on trend line and support and resistance, but I have not been able to drop the video on Fibonacci retracement tool. So hopefully this week I'll be doing that. So let's keep our fingers crossed on that. So without much ado, let's look at step index. Step index. So we're on the weekly time frame, and from the weekly time frame, let's just see what this index has been doing. So if I'm going to, we can see that step index, if we're to analyze it from what we're seeing on our chart, we can see that initially it was making a series of lower lows and lower highs. Now, what do I mean? If we look at this, we can see that it was initially in a downtrend. Now, what's a downtrending market? A downtrending market is a market where price makes a series of consecutive lows and lower highs and lower lows. So this is a lower high, there's a lower low, there's a lower high, a lower low, a lower high, a lower low, and lower low, and then price made what? A lower high, and instead of creating another low to take out this low, it made what? Like a double bottom. And of course, like I'd always said, double bottom is like a signaling that the market is about to reverse in the opposite direction, because double bottom, as we all know, is a bullish reversal pattern. So making a double bottom, price pushed up to take out the high. It couldn't, so the market just went into what we call a range. So this was the bottom of the range serving as support, and this became the top of the range serving as what? The resistance. So we could see that the market played within this range for a while and then finally broke out of the range. Now, because the market broke out of this range, the market automatically entered into an what? Uptrend. Now, in contrast to what we saw in a downtrending market, an uptrending market, I've said severally, that it's a market that in which price makes a series of consecutive higher highs and higher lows. So if we look at what we have here, market made a high, made a higher low, a higher high, a higher low, and a higher high. Market made a higher low, excuse me, made a higher low, and instead of making another high to create a higher high to take out this latest high, the market broke down to form what? A low, a new low. So the market has just done what we refer to as what? A change of character. Now, what does that mean? It means that the market has changed from its initial character of making consecutive highs to giving us a low instead of what? A new high. What this means is one of two things. It either means that the market is about to embark on a new downward trajectory, or the market is just trying to take out some of the initial sellers from the market. In other words, the market might just have used this particular place to liquidate a lot of buyers and then could continue upwards. Now, how would we know this? The only way we can tell is to go down to the next lower time frame, which is the what? The daily time frame. Now, okay. Now from the daily time frame, I can simply make this adjustment as the latest place where price broke out from. Now, let's not forget that this support that we have here was the initial resistance of the range that we saw from the what? The weekly time frame. But all these that we already analyzed, and I can take all these out, are no longer of interest really to us. So if I'm to take, because I hate making my charts cumbersome, in the sense that the clearer the chart, the better for me. So let's concentrate on this right hand side of my chart. If I'm to look at what the market is doing currently on the daily time frame, I can say that we can easily spot a head and shoulder pattern. Remember, from the weekly time frame, we saw like what? A change of character, and this change of character was the market refusing to make a new high and instead made a lower high and then like a lower low. Now, until the market makes consecutive lower highs and lower lows, just like we saw from the weekly time frame, we can't definitely say that the market is now in a downtrend. But what are some of the things we can observe to shaping our bias as to what the market is actually trying to do? Now, what I can see on my chart is what? A head and shoulder pattern. And a head and shoulder pattern is what? A bearish reversal pattern. What that means is that if the market is going in an upward direction, when this chart pattern shows up, it means a signal that the market is likely to start going in the downward direction. Now, we already saw like a change of character in the weekly time frame, and now we're spotting a head and shoulder pattern on the daily time frame. Now, the only thing that's rejecting this head and shoulder pattern was the initial resistance from the weekly time frame now acting as what? Support. So remember, when I started this analysis, I said I use three basic tools for my analysis. I said first is the trend line. I use a support or resistance, and then a Fibonacci retracement tool. Looking at this chart now, I feel like I already have opportunity to include these tools. So if I'm to include a trend line, it will be from here down to this point. Now, this will be my trend line. Remember, already spotted like a head and shoulder pattern. I've explained severally how to trade head and shoulder pattern, but just for repetition's sake, or for those of us that will be seeing it for the first time, now the head and shoulder pattern, if this were to be the left shoulder, and then we have this as the head. Then this would be what? The right shoulder. Then this would be the neckline. So the rule for trading this pattern says that we'll have to wait for price to break through this neckline. We'll wait for what? Retest. And then we take our sell trade. Remember, we said that the pattern is what? A bearish reversal pattern. Now, just mainly looking at what I've drawn here, you can see that it's similar to what we have here on the daily time frame. Now, to add our last confluence or last two, I can bring my Fibonacci retracement tool here from top, from swing high towards to swing low. Now we can also see that this is like a very, very beautiful A plus setup, in the sense that every tool that I've imputed here aligns. Now let's start with the support, now turning resistance. This is the neckline of the head and shoulder pattern. This is our trend line. Our trend line already has 1 and 2 touches. Now the neckline of the head and shoulder pattern is already broken, just as I explained here. And we already see that price is retracing back towards this neckline already. And to add confidence to our confluence, we can see that the golden zone, what I call the Fibonacci retracement golden zone, I've talked about this severally, which is the zone between the 61.8% and 50% mark, is clearly aligning with the neckline resistance of our head and shoulder pattern. So this is a very, very beautiful setup that is likely to push price downwards. So what do we do? How do we now approach this market? All we need to do now would be to wait for price, since price is already retracing upwards, to wait for price to get into this zone, and then we see how the market reacts. So the question would now be, what would I be expecting? Now, if we go down to the next to lower time frame, which is the H4 time frame, we can see that price in this lower time frame is already making higher highs and higher lows. In other words, price is approaching this zone. So let's go back to the daily time frame to help us view the zone clearer. Now, once price gets into the zone, all I have to do will be to go to the H1 time frame and see what happens. So what will I be looking out for? I'll be looking out for more bearish reversal chart pattern. In other words, if price gets into this place, I see candlestick patterns like bearish engulfing within this zone, then I'll be ready to take my trade. Now, if I impute a counter trend line, let's go to the H1 time frame. So if price gets into this zone, and this is my counter trend line within the zone, once this trend line breaks and there's a retest, then I can take my sell trade. So just to recap everything that we've said concerning this particular index, we said it was initially in an uptrend. We experienced a change in character in the weekly time frame, and then we went to the daily time frame where we saw that price has formed what? A head and shoulder pattern. So we added our other confluences, which were the resistance zone acting, the support zone just broken, which was acting initially as the neckline, and we added our what? Trend line. So this, we said that price would likely go up to retest this neckline, making a third touch of this trend line, which all are aligning also with the Fibonacci 2 retracement golden zone. So all we have to do will be to wait and see how this plays out. So if you're coming across this analysis channel for the very first time and you feel that whatever you've seen here makes sense to you, I think it would be fair to plead that you hit on the subscribe button, as I'm going to be monitoring this as it plays out. Also, if you've been here before, you've subscribed before, please kindly hit on the like button and share this also with your friends to allow this video to go viral. This is a trading academy. If you want to learn how to analyze the market skillfully like this, we take mentorship classes where we can teach you this pure price action strategy and a whole lot of other things on how to become more profitable in your trading. So if you're starting out your trading journey, you can reach out to us via the WhatsApp number on my bio. Thanks a lot for your time. Thanks for watching this video, and thanks for always supporting this channel. Cheers.